To News 9 Live, and you're watching First Take. I am Amit Ranjan, and with me in the studio is Karthik Malhotra. The earnings season continues, and we have results and previews of some heavyweights in the tech, auto, banking spaces today. But first, let's take a look at what's happening around the world. There seems to be a sea of red in the West, with Dow Jones closing in the negative at 0.98%, S&P 500 in the negative at 0.46%, and Nasdaq Composite in the negative at 0.64%. Coming to Europe, even the Stock 600 closed in the red at 0.64%. Karthik, economic data that worrying?
So, Amit, we live in a country where our markets react in a very volatile manner to any inflow on macro data. US, on the other hand, is a far more mature market. So even when data is very shocking, you don't see the kind of bloodbath of 5%, 8%, 10%, and it's still just about in decimal points, maybe around 1% or so. Now, what are the cues which are acting as triggers for the downfall of the US markets? I think very simply put, all the macro data which has come from the US is contrary to what the bulls in the US markets would have wanted. Number one, inflation. Inflation is coming in hot, inflation is coming in sticky, and inflation at about 3.7% in the US is well above the forecasted target of about 3.4 and well above what the US Fed wanted at about 2%. Yes. Right. So any hopes there of a rate cut in the US and that whole narrative of, higher for longer now becomes higher for even longer, and I think any possibility of a rate cut this year now becomes very, very slim, and the opposite, which could be a rate hike, cannot be ruled out at this time. Coming specifically on inflation, and there's election year, so inflation, inflation is not going to pinch as much in the US as it pinches in India, given the overall demographic, but it is obviously something which is going to wane on the elections in November. Then look at the GDP growth. GDP growth for the quarter of Jan to March Q1 in the US has again come in below expectation. It's coming at about 1.6%. Now compare this to the last quarter growth at about 2.4%. Obviously it's a decline. And the last year started at a much better note for the US. So 1.6 again a low growth. At 3.7 high inflation. Now what is all this doing to the bond market? US now, ever since November, is looking at bond yields again in the range of about 5% or so, 4.7% for the 10-year and a little over 5% for the 2-year bonds. So overall, what this indicates is that that there is obviously some sort of a dampening effect when it comes to the sentiment of the bulls on the US markets.
Okay, so that's about in the US. Do we have the guest in as yet?
I think what's another fascinating story in the US right now is the earnings season. And we have seen, it started with Tesla. So talk about the Magnificent Seven, for example. It started with Tesla. And just yesterday, we had three other biggies. We had Microsoft, we had Google, and we also had Intel. And in addition to that, we had Meta. So, yes, the earnings season has also played a little bit of a tepid role when it comes to US markets. Now, look at the stocks of the Magnificent Seven, for example. So, on your screen right now, if you look at the returns that they have given year to date from the 1st of Jan of 2024 to at present, where we are on the US time 25th of April, India time 26th of April, you see that except for Apple, it seems like a pretty good beginning of the year, except for Apple and except for Tesla. So, all the big tech stocks you will see out there have given pretty neat returns. The highest performing, best performing stack among all of those happens to be NVIDIA. Now, parallel to NVIDIA, the results that came from Intel yesterday, showed a decline. So, NVIDIA obviously is leading the race when it comes to AI-driven GPUs and the whole chip development race. Intel, on the contrary, was another drag on the US markets yesterday. If you look at just yesterday's figures, which are on your screen right now, you've seen Alphabet, you've seen Amazon, and the growth which was expected to come from Apple did not come as expected, and hence almost a 2% decline in Apple stocks yesterday. But whatever growth and whatever aspirations you see coming from the Apple stables commentary right now seem to be in the direction of cloud and not artificial intelligence. Compare that to Microsoft, and Microsoft is also incidentally down yesterday about 2.4%. The commentary coming from Microsoft is that growth at the cost of AI, and that is the difference between Alphabet and Microsoft right now. Meta came out with a shocker yesterday. And Meta down about 10% also became a drag, and the earnings and the commentary for the forecast of Meta not as per expectations at all.
And Karthik, most of these companies are looking very focusedly at India. We have Mr. Avinash Gorakshakar, our guest today, and let's see how this plays out for India in the times to come. Sir, we have economic data that has come in from the US. What repercussions do you see of that in the Indian markets, and do you to India, and do you see a rate cut really happening in the US this year, given this economic data coming in?
Yeah, good morning, Amit. See, my guess is that interest cut rates are now ruled out, considering the kind of trajectory which we have seen in the inflation data. And I think unless inflation does not come down to comfort levels of 2%, which the Fed requires, I think a rate cut is very difficult, although, there are expectations that a rate cut could possibly come if macro numbers change positively. And that could happen possibly at the time of the US presidential elections. But anything in the near term is completely ruled out. And as far as, the Indian markets are concerned, I think clearly, one negative development, which of late all of us have been seeing is that the rupee has become weak, the dollar has become stronger, and that has resulted in a heavy outflow of FI selling almost every single day. So, this trend is definitely not good. The RBI is making efforts to hold on to the rupee. But I think once elections are over, I think you would probably see a further weakness in the rupee, and that is definitely not good for the Indian economy. Overall, I think corporate numbers have been mixed. I think we have seen good positive surprises in some sectors. Yesterday, IndusInd Bank came out with pretty solid data numbers. Axis Bank came out with good numbers. But on the other hand, numbers from AU Small Finance Bank was slightly tepid. So I think, banking as a pack has done well. But I think overall, I would say that real estate, auto components, capital goods, cement, these are sectors where there is strong demand on the ground. And I think, investors should take a stock specific call now. With the election schedule now going on in full flow, I think you're going to see a lot of volatility, not only from global factors, but even from domestic developments. And therefore, the next 1.5 months is going to be extremely volatile. So I think investors need to take that into account, that, this is not going to be a secular market. You're going to see ups and downs, and valuations as of now are not cheap. They are fair to expensive. So I think you need to be very selective when you want to buy anything in the market as of now.
Hi Avinash, good morning. Karthik Malhotra here from the studio. Linked to what you were talking about, the FII outflow expected with a weakening rupee, I think linked very closely to that is also the data which has come from the US about the US 10-year yields as well as 2-year yields almost being at a 5-month high. Is that going to add further pressure to FIIs wanting to cash out of the Indian market? And then if that cash out is significant enough, will we see the DIIs compensating for that in equal measure?
Yeah, that is exactly what is going to happen, because, if you see the inflows for the local institutions, the average, SIPs every month are now averaging around 19,000 crores. So they have a large liquidity to, battle the FII outflow. And that is something which has helped the market, continuously go up. Like today also the markets have, moved up clearly because there's strong kind of liquidity support from the local institutions.
Right.
And I think most of this money goes in the large cap, in the visible stocks, and they are compulsory required to invest about 90 to 95% of the AUM immediately. So I think yes, there is a possibility that this trend will continue till the time bond yields don't contract. And I think this is exactly what the market is also discounting now.
I want to also spend a minute with you on oil, because oil, unlike, the expectations after Israel did, retaliate against Iran, the expectation on oil was that oil markets are going to become expensive and crude is going to rise. But we've seen that overall the oil markets have not really, been as spooked and as shocked with what is happening in West Asia as investors were perhaps expecting them to be. So what is your long-term view on oil, and how do you see that playing on inflation both in the US as well as back home here in India?
So I think, crude prices unlikely to, jump significantly, because at least now the geopolitical, scene is little more, soft and silent. And I think, Israel, Iraq, which actually what happened now, I think very clearly the market now has got a feeling that no major kind of further development could happen in this pocket. And that would mean that crude prices would remain in a very close range between, say, $85 to $90 a barrel. And at these levels, I don't think you're going to see any negative surprise, for the Indian economy. Yes, if the crude prices go above $100 a barrel, and there are some further negative geopolitical developments, then I think that could upset the cart. But yes, I think inflation to a large extent would be dependent on how crude moves up. I think for the Indian context, we would also like to take, signals from the US economy. And I think unlikely to see at least a rate cut happening in the next, say, 2 to 3 months. So I think post elections, we'll have to see how the macro numbers pan out. But I think, yes, crude prices currently, at least my view is that they should remain in a band between, say, 85 to $90 a barrel, and things should settle down. So I think there's no need to panic on this front.
No need to panic, sir, on this front. Do hold that thought. We'll pick your brains on domestic issues too after a short break. Keep watching.
We are trying a lot of experiments, innovations and ideas.
We came out with a new format in audio, which is audio series.
Listening for content-oriented company in India, which is a very unique proposition.
When you look at audio in general, we had music, which is like extremely old format, and then we had podcast.
A natural extension to Pocket FM is to move from Hindi to regional content. I think I'd love to see their FY24 numbers, which they claim will be close to 1,000 crores. I think there are talks of them to raise another $80 to $100 million of funding.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
$20,000 people dead and counting. What's happening in the United States of America is unprecedented. You will have to pay for this.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately. For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Welcome back. You're watching First Take, and before we bring our guests on, Mr. Avinash Gorakshakar, let's take a look at how the domestic markets are doing this morning. The Nifty has opened flat, up just about 0.06%. Sensex is up, also flat, just up about 0.11%. Mid caps are up 0.63%. Small caps are also up 0.55%. The volatility is not gone up too much from yesterday, up 2.23%. If we look at the specific sectors, Nifty Bank is marginally down from yesterday's closing. So is Nifty Auto. The only sectors that are doing positive are Nifty IT, Nifty Media, and of course Nifty Metals and Nifty Pharma. These are the sectors that are slightly in the positive, but all muted. I'll come back to Mr. Avinash Gorakshakar, sir. We were talking to you about the global headwinds. The markets today in India, unlike the West, are slightly in the positive, although muted. Are they reacting to the economic data that has come from the US, and more the chance that there will not be any rate cuts in the West this year, likely?
I think, my guess is that markets are now going to be guided more by domestic factors. The global data point, which came out yesterday about US GDP numbers, I think is unlikely to have any immediate impact on the markets, at least in the short term. I think the main agenda for the markets here would be how the elections pan out, what's going to be the final result. And I think, these data points would be more important in the current context. Most importantly, this is earnings season. So I think most of the market participants are looking at, data points which would be produced at the year end by the company managements. What kind of business commentaries do they do? So I think, despite the fact that US markets are seeing a little bit of underperformance, weak macro data, Indian markets are obviously going to be guided by corporate data points, as well as, the election kind of, run up, which is now going to be more important, at least over the next, couple of months. Only once these two events are complete, then I think you could see the markets again focusing and looking at global data points. So I think till that time, Indian markets would be more, dictated by local trends rather than international events, which happened, yesterday.
And talking about international trends and just staying with them for just a little bit longer, Avinash, India's IT stack, do you see that to continue to reel under pressure, for the next few more quarters, definitely, given the economic data from the US?
See, Karthik, I think if you see the Q4 numbers of most of the big IT companies, I think quite disappointing numbers, from TCS, Infosys, typically, larger players. I think one or two companies, like Persistent showed a decent set of numbers. But I think the key data point, which is very important, is that even as of now, order wins from US are coming at a slow pace. And hopefully, we could see some clarity emerging only once the US elections are over. So I think maybe for the next 2 to 3 quarters, despite the fact that all these companies are asset light, cash rich, they pay good dividends, the growth quotient seems to be missing out. And I think till that time, IT would definitely be an underperformer. I think even if one were to look at, companies like Tata Technologies, which are very solid, have got a very solid clientele, even this kind of stock is underperforming in the market as of now. So I would believe that, investors should take a slightly longer term call if they want to bet contra on this sector. Maybe next couple of years, they could make decent money. But in the near term, this sector would at best be a market performer.
Near term, this sector will be a marginal performer, according to you, sir. Thank you very much for being with us. Always a pleasure to have you on our show. We'll move on from here. The IT services sector is expected to report muted growth primarily on account of a weaker discretionary spend, with challenging times hitting most large economies globally. HCL Tech is due to announce their quarterly results today. Analysts expect their revenue to grow around 6%, net profits around 3% only. EBITDA is likely to go down around 2% year on year. The stock itself has been the best performer in the tech space over the last 1 year. We have Mr. Kush Bora with us on the show, and we'll pick his brains on HCL Tech for some time now. Kush, welcome to the show.
Hi, always a pleasure to be here. A very good morning to you.
I was talking about HCL Tech. Now, they have reported slightly muted results. EBITDA has actually gone down. Looking at the minutiae, The stock is trading above the 200-day weighted averages, exponential, simple and weighted. By the textbook definition, that means that the stock is firmly in the bull territory. Do you agree? And what do you expect from HCL in the near term? It has done better than all other in the IT pack in the last 1 year.
Sure. Look, my view on the IT pack, at least the big four, TCS, Infosys, HCL, and Wipro, largely the same. There is only the pecking order that you can perhaps argue on, but otherwise, I think that a lot of these names are perhaps going to be in some sort of a consolidation range for some time to come. Now, Wipro perhaps might continue to be the laggard as it has been for some time now. HCL is one of our top picks, so we can only have a pecking order amongst this. While you are right that the stock is way above its 200-day moving average, what is also comforting is the fact that today the stock is moving above its 20-day moving average, which also indicates near-term bullishness in the stock. But if I were to pick, let's say, a sector where I have to park fresh, capital, I don't think IT would just yet make the cut. And the reason being that, there is a lot of diverse, factors at play here. If the news from US is good, then perhaps the Fed will act up. If it's not, then anyway, it's a challenge, right? So that's why I think, these stocks will see some pressure in the near term. From my perspective, these are good stocks to have in your portfolio from a safety perspective. And let's say a nominal, 10 to 12% kind of a standard return. But I don't see a very big momentum coming up, in these stocks anytime soon.
Hi Kush, good morning. Karthik here. Just want to understand, why is HCL Tech the front runner when it comes to your own IT pack? I understand you're saying IT is not the territory to enter right now, but what makes HCL better than, let's say, the likes of TCS and Infosys for you right now?
Hi Karthik. See, from a technical standpoint, the lens that I see these stocks from, if you see, this is perhaps the only stock that has sustained above its near-term averages, has given a better, relative return, compared to the other names. Also, when you see the spurt that comes in this stock is actually more reliable, it's volume backed, and the stock does tend to give that spurt. TCS and Infosys, I mean, they've had their share of up moves, but then they continue to fizzle out. So HCL Tech, if you see, has sustained above these key levels. Even the down move right now that you see, the stock had a support at 1450. It's a medium-term support. That's exactly where the stock rebounded from, and this is the only one that is above the 20-day moving average in the near term. So my guess is that HCL will continue to outperform only from a technical standpoint. As I said, from a medium to long term perspective, I don't really see a momentum coming up. Perhaps a trading bet, once the results are out, as the results are out.
And just staying with IT stocks for just a little bit longer, Kush, do you think the macro data coming from the US obviously is one thing, but do you think things would change for the IT sector after US elections in November? Do you see any sort of a change linked to the election season and not specifically to inflation and GDP growth for India's IT sector?
Not really, because my focus is mainly on the kind of data flow that comes out. The election, if we were to take a parallel from the Indian economy, a lot of your infra stocks haven't really done as well, or rather, are actually probably steady, haven't really given that kind of a breakout yet. Why? Because, we're waiting the election result. Once that is out, perhaps big orders will come in. I think a lot of corporates also are, going to stay put, in the US. They are going to wait and watch the election results, how they go, before they make any kind of big plans and big announcements. But I would still suggest, or I would still say, that the economic data there will play a much bigger factor than the election outcome itself.
Thank you, Kush. Stay on that. We'll be with you right after a short break.
"40 countries, 1,000 multilingual bookstalls, 1.25 lakh people, one destination, the New Delhi World Book Fair 2024.
So it's a great honour to be here. Thank you to the National Book Trust and those that have embraced us over recent days.
I was at the London Book Fair once and I had not participated here, but this fair is an ocean and it's beautiful.
This should be your annual spring picnic.
Through the power of knowledge, we are going to create responsible citizens with global skills and also global responsibility.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Welcome back. We have Mr. Kush Bora still with us on the show. Now, another tech major has announced their results yesterday. Tech Mahindra announced their results yesterday. They were disappointing to say the least. Net profits were down 41%, revenues were down 6%, but the stock seems to be up today almost 10%. Kush, is it time to cash out, or is there another rally around the corner on Tech Mahindra? A quick one here.
No, very much a time to cash out. My suggestion is that, if you see the high for the day, which is 1350, is also the medium-term resistance level for the stock. That's where the stock has actually turned around from. No real triggers, just equally surprised that, with the kind of numbers that were posted, the stock is actually up, as much. But that said, I think 1350 is a resistance zone. We are seeing the stock, slip from there. Not a bad idea to take some money home and perhaps, exit this and switch to, some other alternatives.
Okay, coming to the domestic markets, the Nifty 50 opened slightly in the positive, but just marginally, almost flat. Nifty Bank is slightly in the negative, went down a little bit at 48,566.45 from 48,660 closing yesterday. Where do you see Nifty Bank going from here?
No, it's so interesting that you bring this up. See, I have a very simple theory here. This market, till the elections are on, will be a buy on dips market. I don't see a very big downside to the market, at least till the elections are on. That's the first view. That said, I also don't see a very big breakout. I know the moves that happened in the market yesterday, to be completely honest, was a little bit surprising, because while we were expecting an upside, the momentum or the magnitude yesterday was a little on the higher side to our comfort as well. So from that perspective, the risk reward ratio is not favorable for a long buy at the current levels. So this is a buy on dips market, but also a market where if you get, let's say, a 75 to 100 point rally on the Nifty, or perhaps a 300 point kind of a rally on the bank Nifty, you should continuously cash out. While I said I don't see a big downside to the market till the elections are on, I also don't see a very big upside. I think the resistance levels, will be the highs that the markets have recently made, and we are fairly close to them. So I think there will be some sort of, a consolidation going on, perhaps with a mild positive bias. But this is a market where you buy on dips, but you, without fail, continue to, book profits also, as we go along.
Kush, I'd like to pick your brains on one more sector. Nifty Auto opened slightly in the negative today, but auto major Maruti Suzuki is due to announce their results today. Continuing the trend in the last few quarters, the company is expected to post robust numbers in the March quarter, led by higher sales and strong volume growth. Revenue is expected to jump 20%, net profit as much as 45%, EBITDA over 50% year on year. Maruti Suzuki had earlier reported volume growth of 13% year on year, led by higher sales in the SUV segment that went up 71.5% year on year. Exports grew 21% year on year. I have two questions for you. The stock has not been amongst the best performers in the auto space over the last 1 year. Where do you see the focus of Maruti Suzuki in the coming year? EVs or SUVs, the segment that has done so well for them?
So, I think the stock itself has actually done rather well. If you see for this year, from January onwards, the stock was below that 10,000 mark and already run up to 13,000. So we are seeing a neat 30% kind of a run in a stock as big as Maruti. So I think it's a fair point to say that the stock might continue to consolidate here for some time. But on the whole, we are very bullish on this space. Just to add one more line here, we're slightly more bullish on the auto ancillary space than the manufacturers themselves. But I think the entire pack will do well. Now, to answer your question, where do we see the focus? I think SUVs are something that has already been a part of Maruti's strategy. EV perhaps will start to become a part of this strategy. But from what I understand, Maruti typically has been a laggard in terms of catching market trends. So I think EV will perhaps take some more time before it takes center stage as a part of the strategy. I think SUVs are the place where they will continue to bolster their portfolio.
My second question is something that you already mentioned. The stock is, while it is not the best in the tech, in the auto pack, this is trading way above the 200-day moving averages. Do you really see a rally round the corner? Because amongst the pack, it is not the best, but it is way above the, whether it is weighted moving average, exponential or simple, it's trading way above all of them.
Absolutely. And see, let me put it this way. It depends on the kind of horizon that you're looking at. If you're looking at a near-term move, then a lot of it will be result based. Also, let me say one thing as a disclaimer, which is we typically don't recommend stock trading strategies from a near-term perspective, on the day of the result, because of course it can be a very volatile day for the stock. That said, if you look at the setup, there is something called a negative RSI divergence where the stock has actually moved to its previous high levels, but the strength seems to be missing. So I think even the markets are waiting for the result. But if I look at it from a medium-term perspective, there are pointers suggesting that the stock is poised to move higher from here. I think 14,500 is the next level to watch for on this stock. If I get any kind of a dip, let's say to 1,200, 12,500 or below levels, I will be a buyer in Maruti for a target of 14,000 and 14,500.
Just to stay with the auto sector, Kush, how do you see the difference on the stock market when it comes to Maruti Suzuki versus the very close now number 2, which is actually a leader in the EV space, which is Tata Motors, and the third, Hyundai, also likely to list sometime this year. So how do you see Tata Motors and Maruti on a technical chart in comparison to each other?
So Tata Motors has had a fantastic run, but it's gone into this consolidation mode. Now, if you're looking at it from a medium to a long-term perspective, this will turn out to be an opportunity. But from a purely trading perspective, I will give Maruti the edge just now, because if you see the momentum in the stock, it's way higher, way better than Tata Motor. So we are bullish on both these names. But from just a pure momentum or a trading perspective, my suggestion would be to stick to a Maruti. Tata Motors is also trying to inch higher, but then the 1,040 kind of levels, which have in the past also acted as resistance, will continue to play. So the stock might consolidate here for some time. So from a momentum perspective, Maruti, but bullish on both.
Okay, and if Hyundai were to actually list in the Indian markets anytime soon, then how would the stock markets and the specific shares of Maruti and Tata get divided, or interest get divided?
Very honestly, I don't think by a whole lot. Typically what we've seen is when a company or especially a leader in the sector also lists the existing players, the existing listed players do get a shot in the arm, and we see a bit of a run up. But I don't think that really will be the case for likes of Tata Motors or Maruti. Already big names, the fundamentals are very clear out here. So while this might be healthy competition now in the listed space, but I don't think there'll be too much of an effect. Also, just the sheer amount of capital floating around, I think that also will get absorbed, fairly easily. So I think these two companies will continue to run their course, except for maybe a brief, uptick.
Thank you, Kush. Do stay with us. We'll move into a short break before we take your picks for the day for our investors.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए, और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का